Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. I'll start with ICE raw sugar in New York. I'm so sorry for the multitude of lines I've drawn on this daily chart. I would just like you to know they are all valid in deciphering what is going on. The recent declines below the long moving average, currently at 1859, can be traced back to three patterns created between August 2021 and January 2022. These patterns are, well, to start with, they are complex. Complex versions of normal workaday patterns. I'm going to do something I normally try not to, but I will highlight them with my cursor. So, pattern 1, a complex head and shoulders top from August-November 2021, neckline currently at 2038. So that means that you've got the shoulder there, the head there, and the second shoulder there with the neckline running up along there. The second pattern, a complex triple top from August to November 2021. Neckline is currently on that at 1949. And that's also looking at these three, but as a triple top. The neckline for the original neckline for the head and shoulders is there. The neckline for the triple top is there. The third and most recent, an awkward head and shoulders top from October 2021 to January 2021. And this one you can see the shoulder there, the head and the shoulder, and it's sloping down to the right with the neckline running through down to there. Patterns 1 and 2 can be somewhat disregarded as the targets below for both have already been reached. And it's only the general bearish activity created by these two that we need to consider. Pattern 3, the awkward head and shoulders top, is still ongoing and needs to be considered. 3 weeks ago, the market tried breaking below both the neckline and the long moving average, managing to close with 2 consecutive closes below the neckline. However, the market was held up on a closing basis by the 50% Fibonacci line with the March to November 2021 move at 1768. The recovery lasts as far as the combination of the short-medium moving average, currently at 1904, and especially the medium moving average, currently 1924, which abruptly capped the rise. Since then, prices have dropped again to test the remaining neckline once more. So far, well, it's sort of held. Thus, I cannot really give a possible target below. However, I can give an idea of the size of the move should the neckline be properly broken. It would be in the order of about 1.1 cents below the broken neckline. Hence, if it was today, then it would be in the 1690 cents area. There are just 2 other patterns I'd like to highlight. They are both young and nascent. And they'll be happy to discard one or both of them if they didn't fit. They are the recent December 2021 to January 2022 bearish Andrews and shift pitchforks. Currently, the market is between the middle time overhead of the bearish shift pitchfork, currently at 1821, and the middle time below of the steeper bearish Andrews pitchfork, currently at 1784. ICE Europe white sugar in London. Things are more complicated here than in the New York contract. We do not have as clear head and shoulders top patterns here as we have in New York. There is a possible August to December 2021 head and shoulders pattern. Neckline is currently at 495.90, which was breached 4 weeks ago, but the market did not manage to reach down to the rising long moving average, currently at 481.10, and indeed seems to have been rejected by it. The only pattern that seems to have a chance, and even then it seems a slim one, is a possible diamond pattern formed since September 2021 and still in operation. We have the downtrend below, currently at 504.20, and the shallow uptrend the downtrend above, currently at 504.20, and the shallow uptrend below, currently 484.70. I just wish to reiterate that none of these patterns are that good, and they seem to be there. They just seem to be there, so that's why I'm talking about them. So we haven't broken out of either of these 2 patterns as yet. But an idea for the downside for the split head and shoulders pattern would be in the $24.60 area under the break of the neckline. So that if it was today, it would be in the 471.30 area, well below the long moving average and close to the 50% Fibonacci line for the whole of the 2021 move of 471.60. Meanwhile, the possible diamond pattern is a little harder to judge, but I would suggest either a break upwards of $31.30 over the downtrend or a break lower of $30 below the uptrend. Today that would be something in the area of 535.5 above and 454.40 below. These are not targets as yet, so we have not had a confirmed break in either direction, though we have looked like we've breached the uptrend for the head and shoulders pattern today. Be interesting to see what happens in the next few days. Sugar white premium. There are three key patterns in effect here. The first one is looking pretty solid and seemingly a continuing bullish influence on the market. The second one has been consistent bearish influence on the market but has been challenged since the start of this year. The final one has crept up quietly and is more like a delayed action explosive device, one that may explode soon but not just yet. So the solid support is the mid-August today uptrend, currently at 88.75. This is quite a steep angled pattern, quite a steep angled uptrend even, and one I would normally regard as having a limited lifespan. However, it has been in operation all this time and during this time has become a 4-pointer, almost a 5-pointer uptrend. Thus, this is one to watch closely. The next is the age-old May 2020 to February 2021 bearish shift pitchfork. This has been breached on a number of occasions, both on the top side and on the downside. However, in all that time we have never had two consecutive closes, either above the upper tine nor below the lower tine. The upper tine is currently at 91.25 and the lower tine is currently at 34.5. Yet we are currently above this and the finessed May 2020 today downtrend, so above the upper tine and above the finessed May 2020 today downtrend, with which it geometrically shares a trend line. Therefore, it will be very, very interesting to see how this plays out this week and next. Finally, a subtle one. Over Christmas, we had a crossover for a bow tie formation consisting of the rising short moving average currently at 92.25, the rising short medium moving average currently 83.25, and the slowly declining long moving average currently 76.5. What was interesting was how the moving averages went into the bow tie in the right order and came out of it in the right order, a rare feat in some markets. So what should we look for? Well, theoretically the market should move in the direction of the outgoing moving averages, in this case higher, which it has already done so. However, the key move theoretically should happen between 15 to 20 trading sessions after the crossover. In this case, it would be between the weeks of the 4th to the 9th of May, 4th of April to 9th of May this year. Hence, I would suggest putting a note in your respective diaries for that period, just in case. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.